Welcome to GexPro Daily Market View. Look, the size is the story today. Off-exchange prints everywhere. The heavy hitters, crypto, even silver. Big money moving, price barely reacting. That gap matters. Breadth is better. No doubt. More names participating. More stocks back above their longer-term averages. That's usually constructive. Doesn't feel like a market about to fall apart. But at the same time, leadership's getting weird. I'm watching inflation first. Always. It cooled, stalled, now it's sticky again. The data's not screaming re-acceleration, but it's not giving the chair much room either. The administration wants cuts. The chair's dragging their feet. And there's a new chair coming later this year, which just adds another layer of uncertainty. Tomorrow's CPI? Yeah, it can move things short term. But honestly, if it's in the headlines, it's probably already in the price. Rate cut expectations are drifting lower. 2 maybe, not 4. Growth's still holding up, mostly off data center spend and that whole AI build-out. Hard to ease aggressively into that without lighting something else on fire. So, liquidity's fine, just not expanding the way people were hoping a few months ago. Now, check the tape on the indices. Industrials and transports are making new highs. Semis are still acting well. As long as the chip complex holds together, it's hard to get outright bearish. When that breaks, different conversation. But here's the thing. The heavy hitters aren't going anywhere. 6 months of sideways action. Massive dark pool prints sitting right around current levels. The biggest one, from months ago, at basically the same price. That doesn't look like momentum. Feels more like distribution. Or at least rotation. And rotation's real. Smaller names are working. Energy services are waking up. Metals keep catching bids. When small caps lead for a bit, that's fine. When they lead for too long, that's when it starts to matter macro-wise. We're not there yet. Just flagging it. Bonds are boring. Flat. No panic. Credit's calm. That tells me stress isn't here yet. Just repositioning. Crypto's sending mixed signals. Transactions are exploding, especially on the smart contract side. That's real activity. At the same time, the big coin's stuck in a range. We just saw a massive fast sweep go through off-exchange. Could be a buy. Could be someone in a hurry. Price hasn't confirmed either way. Flows show some profit-taking lately, but that one big print in the middle? That's usually not retail. I'm also watching the big EV name. A lot of size traded around that lower level. Options are doing the heavy lifting there. Support looks real for now, but it needs to clear the upper zone to get momentum back. Otherwise, it's just chop. Silver's dangerous. Big sweep through the physical-backed product. Fast money. Thin liquidity. Last time that happened, we got a shakeout. Long term, fine. Short term, respect the volatility. Tech valuations are actually compressing. Earnings have helped. But the market's starting to ask harder questions about AI spend and payback periods. That's forward-looking stuff. 18 months out, not next quarter. Energy's the wild card. Crude's pushing back toward a level that matters. Sentiment's been awful for a long time. If oil holds up here, inflation math changes fast. Oil usually tells you before the data does. On the index side, the advanced decline line looks strong. Dips keep getting bought. But under the surface, defensives are catching bids too. Staples breaking out. Healthcare improving. Defense names moving before the headlines hit. That's not panic, but it's not pure risk on either. One more thing. Watch the dollar. Seriously, if policy pressure keeps building and data doesn't back it up, the currency's where it shows first. And if that slips, commodities and inflation don't wait around. 3 things to watch. Off-exchange activity in the heavy hitters versus index price. Crude, holding above recent breakout zones. The dollar's trend as policy noise ramps up.